One of the most common questions that we get asked on this channel is, where is the smart money actually investing? In today's video, we'll take a look at the statistical relevance behind this zone and, of course, what hedge funds and institutions are doing right now. We'll also take a look at retail traders like you and I and figure out whether we're making the same mistakes we always do. As tweezers appear on the Magnificent Seven, Tesla rejects the lows, and so much more is going on. Could it be that it's come time to follow the flows more than just the negative news bias? Well, in today's video, we'll talk about stocks, commodities, and cryptos and break it all down for you together. This one's not to be missed, guys. We'll see you in a minute. Well, welcome back everybody to The Daily Show. My name is Tom, and in today's video, we have a lot to discuss. Smart money versus dumb money, of course, some statistics around key levels, and more importantly, some massive dark pool movements. Yes, it's a big session and of course a big week. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, there's a lot to discuss. Smart money versus dumb money. What exactly are we doing right now that could be a big mistake? And of course, where are we in terms of critical levels? As always, I want to give you guys a big shout out, especially right now for getting us to 200,000. And thank you so much for your kind comments over the last week, telling me about how many shows you've actually watched. Some of you literally tell me you've watched every single one ever. I'm telling you what, that is a huge amount of commitment. So thank you so much, guys, and subscribe if you haven't already done so. If you want to find out more about daily stock market, crypto market, and of course, commodities markets throughout 2025. We've got a lot to talk about this year. It's going to be absolutely wild. Now, let's get into it. Hedge fund managers, institutional clients, what are they doing? Well, as it's been pretty well documented, they've been kind of selling, and they've started to slow or taper their sells. And this is an important point, because what you might notice down here is private clients have been basically buying the dip, but that may have just changed. Let's have a look at the latest data here. And it is pretty wild when it comes to what has just happened. US equities saw retail outflows in the last 2 weeks. What could that tell us? Maybe it is maximum fear starting to approach. And while the others are tapering, being hedge funds and institutions, dark pool activity kind of showing that a little bit, and we'll talk about that later in today's video, we're basically at a point here where the last 2 weeks has made a huge switch, which we haven't seen in over 12 months. So why could this be? Well, one of the big things is fear. Of course, tariffs, the news, everything else. We often say if it's in the news, it's in the price. And we say if it's in the press, it's in the price, actually. But this is probably a case here for what is going to happen on April the 2nd. Now, why do we say that? Because that's, of course, when these tariffs are meant to be implemented and everyone is going ballistic about it. Well, as it turns out, corporate insiders may not be as worried as you may expect, as they've been purchasing this last week or week and a half. And that's usually a pretty good sign. The next 3 months after corporate insider velocity started to increase, we usually saw a bit of a bounce. Now, that's not to mark that it's absolutely the end of the sell or anything like that. We've talked plenty about the stats moving forward, but I think it's at least worthwhile paying attention to. And on top of all of this, of course, we need to be paying attention to how retail traders are actually feeling right now. The latest retail trader sentiment report kind of suggests they're not buying the dip, but they have been. But it suggests that also these institutions, or like people that are a little bit more sophisticated, are super bearish. 60% of people that respond to this are actually going with the bearish side over the next 6 months. And the highest bearish reading was on the 26th of February this year. That is like epic bearishness. That is the type of level that we've usually seen during a full-on financial crisis, or at least a 20% sell-off, not a 10% one like we are right now. Now, of course, this brings out a differing of opinions. Some people will be saying a recession is upon us, and obviously you guys know, if you've been watching the channel for a while, I have been way more negative this year than I usually am over the last 2 years. And the main reason is because it's a little bit more unclear exactly which path we're going on. We shared a stat only about 2 weeks ago when the market actually fell through the floor, showing you that this type of velocity to the downside can bring with it recessionary style markets. But for now, what do we see? Well, the CTAs are hugely oversold. And this brings in an interesting one because usually we see a certain thing happen in April, and that tends to bring positive tape. So basically, CTAs are going to be forced to buy $69.83 billion and only sell a little bit over the next month. Now, could that instigate a bottom in the markets? Well, of course, yes, it possibly could, and it's something we need to be paying attention to. I also see this argument coming up all the time, which is the one about mutual funds and ETF outflows and all of these types of things. But basically, the big deal here is that assets outside of markets are getting big, and of course, they are technically ready to be deployed. Now, you probably heard this number before, $10 trillion on the sidelines globally in terms of MMF assets, and of course, $8.4 trillion alone in the US. But this doesn't have to go into the market, although some of it may be deployed. Now, what are some other good signs for the markets right now? And there, of course, are some bad ones that we'll look at later on. But the big one here is, of course, the 50 weekly moving average. Now, it doesn't always hold the market. As you can see here, we got a small relief bounce back in 2022, where we actually were selling heavily into the beginnings of the Ukraine-Russia kind of conflict. And we can also see over here that in previous periods, it's been a pretty consistent resistance or support line. Now, the 50 weekly is well used by institutions out there, and you often see it appear in their reports. So they do pay attention to it. And one of the reasons why it could be paid attention to potentially right now is not only have we stopped at it, but we've seen wick purchasing just as you usually get a turning point in the March statistics. Yes, at the end of March into April, we usually see a turn. And you can see here from the Stock Traders Almanac that basically the March market performance over the recent 21 years from 2004 to 2024 versus 25 almost looks identical to what usually we would have happen. If you actually go all the way back to 1928, you'll notice that April pretty much turns the market. And again, that is a statistical historical fact. Now, does that mean it's going to happen again? No, but I do find the timing very interesting. April the 2nd is the line in the sand here for the tariffs. Now, if that doesn't happen, doesn't materialize, is turned off, whatever could happen at that particular event, then all of a sudden we could see a huge shift, of course, towards buying. And I do feel like the market right now, and it'd be interesting to see what you guys think, is starting to find what looks like maybe a little bit of base thanks to the Magnificent Seven stocks. Speaking of the Magnificent Seven, let's have a look. Tesla down 50% from top to bottom, obviously recovered a little bit. But you'll notice it's not really just one stock, it's all of them, down like 20% pretty much across the board. Google in particular getting thrashed down into some pretty significant lows and actually looking interestingly, especially interesting on the charts if it does turn around. The great thing about this market is even if it